Bring in Intelligent Alpha founder Doug Clinton. Doug, how do you think about all of this? I mean, is it Amazon is it a hedge? Is it a new business? Is it just for their mostly internal use? Is it an actual threat to NVIDIA?
I would say first and foremost, Mike, it's not really a major threat to NVIDIA, at least if you're thinking about it over the next 2 to 3 years. And the simple math for me is if you think about what is the real customer set for Amazon's really, I mean, we're talking about GPUs today. Graviton's a GPU, Trainium and Inferentium. Those are their GPU-based chips that really focus on AI customers. We know they're working with Apple, they're working with Anthropic and Databricks, but I think they're essentially boxed out from the big hyperscalers. So you talk about Google, Microsoft, Meta, Oracle, those companies aren't going to want to buy chips from really one of their biggest competitors in the cloud space. And so could they eat away at the edges of NVIDIA a little bit? Yes, but I don't think it's a true threat to dismounting them from the lead.
For so long, after the advent of ChatGPT and the excitement that first hit about the AI infrastructure story, it really has been a keep it simple principle when it comes to NVIDIA and the other huge companies that could dominate and lead. Is it changing at all? I mean, we've had this sort of affirmation of the overall theme and maybe how sustainable it is over the coming quarters, but is it going to splinter out? Or are there going to be kind of these bank shot plays for you as an investor?
I think about that in two ways. I mean, number one, what are the companies that are currently public, that aren't the hyperscalers, the mega caps that we all sort of own? One that we have owned at Intelligent Alpha that our models like, our AI models that pick our stocks, is Marvell, which ironically is actually one of Amazon's suppliers on the custom chip side. And so there's been some controversy essentially about whether or not Amazon might start working with another chip company to develop some of their GPUs, their custom GPUs. It sounds like Marvell still has their foot in the game there, and I think any positive news on that front would be great for the stock. So that's one area we've looked. The other area, Mike, is the IPO window does feel like it's open. You look at some of the successes more recently, CoreWeave, especially in the AI space, Circle, incredible IPO. I think you're going to start seeing other companies like Databricks potentially come out and go IPO, and I think those are going to be a great place for investors to look for AI exposure.
This year, NVIDIA's stock has fluctuated a lot. A few months ago, the stock was pulled down by trade-related fears, but now that it is back to its all-time highs, those problems seem to be behind it. The company has been one of the top growth stocks to hold in recent years because of its innovative artificial intelligence, AI chips, which are essential for many tech companies implementing next-generation technologies and pursuing AI projects. Is NVIDIA's stock still a viable investment at its current price? Or would it be wiser to wait for a price decline before adding it to your portfolio, given the uncertainty surrounding the future of the global economy? The world's top producer of AI chips is NVIDIA. Due to its ability to command high margins for its products, it has been able to rapidly increase its bottom line. NVIDIA stands out for its earnings growth, which in recent years has surpassed its top line, even though many growth firms are able to raise their sales at spectacular rates. The stock may not even be that costly. According to analyst forecasts, it trades at a fairly modest forward price-to-earnings (PE) multiple of 33, despite having a market capitalization of over $3.5 trillion. That's not exactly inexpensive, but considering the company's dominance and rapid growth, it's also not that costly. NVIDIA is definitely not average. In this case, a premium is justified. The average stock on the S&P 500 trades at 22.9 times its projected earnings. Investors who wait for a drop as NVIDIA's profits continue to rise run the danger of seeing the stock rise even if its PE ratio stays the same. It might not be wise to wait at this time because of this. The strongest justification for waiting is that NVIDIA is profiting from the possibility that too much optimism and bullishness are priced into the markets as a whole, given that the S&P 500 is back to record highs. Regarding trade restrictions concerning China, one of its main markets, the corporation is still quite apprehensive, and because of the uncertainty, it won't even be included in forecasts. Investors just need to recall the initial announcement of reciprocal tariffs in early April to see how quickly the market may swing negative in the face of such worries. NVIDIA's stock was selling for less than $100 at the time. Concerns about whether tech companies are overspending on AI and whether a downturn is inevitable are becoming more prevalent, even outside of China, since this might also negatively impact NVIDIA's growth potential. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
I'm interested in what you think about the federal support of chips and the incentives to build here in the United States. Ultimately, is that what you want to see from a profit margin perspective?
I think it highlights the importance of semiconductor industry as a whole, the strategic importance. But I think it's not just US, right? Globally, each country, they want to see more capacity built domestically for domestic consumption. So I think, broadly speaking, it's too early to tell whether or not it's necessarily good for profit because there's a supply, there's a demand. We have to see how the market dynamics actually play out. But it certainly highlights the importance of the industry as a whole. And I think that's what really technology is about, right? If you think about a lot of the push that's going on, the pace of innovation picking up, a lot of it is happening at the infrastructure level.
Lei, how does that commitment to onshore or expand internationally convert to top-line growth, and when does it convert to top-line growth? These are like really big capital projects, right, that take decades sometimes to get off the ground.
I think, market generally, and as investors, we are forward-looking. So it's not necessarily to say it has to translate into revenue or profit today, but it's really analyzing the market structure and to see how that's changing going forward for the next 5 to 10 years or 20 years. And there's definitely this underlying current in terms of, the competition for technology is picking up, and the upgrade for infrastructure, there's already the underlying AI demand that's going on. And on top of that, for this type of geopolitical tension-driven domestic consumption push, that, we're just seeing the underlying change in the market structure. And that's going to affect the long-term profitability for many of the participants. And that's the more important question. It's not about today, but it's really about 5-10 years out.
The issue with Nvidia's value is that it can appear inexpensive, but only if its rate of growth stays high. The stock could plunge once more at the first sign of a pullback. Nvidia saw a remarkable 69% increase in sales in its most recent quarter, which concluded on April 27th. I doubt that investors would be nearly as optimistic about the company as they are now if that growth rate dropped below 30%. Furthermore, a best-case scenario still appears to be priced and given Nvidia's high value. Even though the year is only 6 months old, there have already been some tremendous fluctuations, ranging from hope to despair to joy again. I have no doubt that Nvidia's stock could drop once more in the future due to some negative news, most likely involving trade. However, whether you purchase Nvidia stock at $140 or $120 may not have a significant impact in the long run if you're a long-term investor and intend to buy and keep it for years. There is a chance that the price will decline, but that might not happen for several months until it has risen to an even higher level. This year, the AI stock dropped below $100, but it doesn't indicate it will happen again. You could be better off just purchasing Nvidia stock sooner rather than later, even if you're mad with yourself for not purchasing it at those prices. If not, you might be waiting for a decline that never materializes, or for the stock to drop to a level it will never return to. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Lei, your fellow technology investors keep talking to me about Broadcom. They basically say, look at the growth and the outlook and how the landscape has changed. When you and I first started talking, it was very much about Nvidia. But now the conversation is like, why is Broadcom not one of the Mag 7 names? How do you see its role in this data center build out that's happening and the sort of varied offering it has across software and hardware?
I think we're still, when we think about the AI build-out, we're still actually in the early innings. If we think about even this year, and in the past few years, when you look, the CapEx certainly has gone up, and the infrastructure themselves, the changes are still happening because we're in the early innings. So I'm not here to comment on specific stock names, but I would certainly say the entire AI supply chain, what we're going to see, and we are quite optimistic in terms of the future because we think the demand is picking up, the adoption has reached an inflection point. So I think there will be various winners in the AI supply chain going forward, and we're still in the very early innings of it. And what's also interesting is in this infrastructure build out, we think the pace of innovation is actually picking up. So the upgrade of infrastructure, the pace of it is actually also picking up. And the shape of the future is actually being formed as we speak. So we believe there'll be multiple winners in the overall supply chain.
Does all that innovation benefit previous winners? I know you're not going to talk individual names, but I think about some of the focus on innovations in chip making to make sure it's more energy efficient. Well, that's coming from startups, perhaps not just Nvidia anymore.
I think what's interesting is when we thought about innovation, and then when we talk about the future leaders, some investors automatically say, oh, there must be the high growth and profitable players. But what is really interesting about this is that if you look the past 10, 15 years, we've had a lot of the consumer-facing names, and those are many of the Mac 7 names. But what is interesting is that this time, the innovation is really about the infrastructure. It's about the underlying technology infrastructure as well as the physical infrastructure. So we're seeing a lot of innovation that's actually happening on the industrial front, on the energy transition front. So there are actually winners that kind of, you would be unexpected and you say, oh, wow, you can find really profitable growth here. And that's what we are looking for.
Lei, one of the big news stories today is xAI, Elon Musk's frontier model maker, raising equity on top of the debt that it's put to the market. Do you track that as a sort of soft data set, the large language model builders and how regularly they raise capital as an indicator of some of the chip names that you have exposure to and that sort of acceleration of spend that you've just outlined?
That's absolutely correct, because when we look at the future AI winners, a lot of the attention has been focused on the public market winners. But what's interesting is disruption is generally, it starts from the private sector, and we actually have some of the very large leaders already, and they generate significant amount of revenue, and they're bringing disruption to the market as a whole. So yes, we track public market as well as private market, especially since these days you're going to see some very large valuation placed on some of these big players. And it's not just because of the valuation, but simply these players are driving significant demand for AI as well.
Nvidia's fiscal first quarter 2026 earnings showed yet another quarter of robust growth. Revenue increased 12% sequentially and a staggering 69% year over year. Performance was mostly driven by data center demand, as seen by a 73% increase in revenue from this clientele year over year. If you want to capitalize on the expansion of AI, these three stocks will be excellent buy and hold investments due to their high rate of growth. As a company, Nvidia is doing quite well. The stock price has increased by more than 1,400% in the last 5 years, so this is not a secret. It would be difficult to argue that Nvidia is a cheap stock, even though the company's price-to-sales and price-to-earnings ratios are both fair when compared to their 5-year norms. The PE ratio is, in fact, a very high 45. There is already a lot of positive news here. According to the glass-half-full perspective, Nvidia has a lot of positive news to provide, and there are no indications that this trend will slow down. However, the field of artificial intelligence, AI, is still relatively new. Although Yahoo appeared to be a search category killer at one point, Alphabet's Google service nevertheless outperformed it. Since AI is still in its infancy, it is still hard to say which businesses, from Palantir Technologies to Nvidia, will succeed in the long run. One thing is certain, though: AI and the data centers where it operates will significantly raise the demand for electricity. According to the National Electrical Manufacturers Association, the demand for electricity will rise by around 300% in the next 10 years alone, and the demand for electricity will vary as a result. Between 2000 and 2020, demand increased by 9% overall, but between 2020 and 2040, it is predicted to rise by 55%. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.